Internal Revenue Service IRS tax news. IRS new law provides relief for eligible taxpayers who need funds from IRAs and other retirement plans. IR 2020-172, July 29, 2020, Washington. The Internal Revenue Service provides a reminder today that Coronavirus Aid, Relief, and Economic Security (CARES Act) can help eligible taxpayers in need by providing favorable tax treatment for withdrawals and retirement plans and IRAs, and allowing certain retirement plans to offer expanded loan options. So remember, when you're thinking about these retirement plans, you're thinking like an individual retirement plan or something with the work, which might be something like a 401k plan or a 403b plan or whatnot. In other words, you're putting money into the retirement plan. Now, most people think that the sole goal of putting money into these types of plans is to save for retirement. That's not really the case here. The reason you're putting it into these types of plans is because you get a tax benefit typically when you put it in. When you put the money in, it lowers the taxes at that point in time that you put the money in, and you might get some benefit from the employer as well. So you're getting those benefits. That's why you put it in there. But you're giving up some restrictions to the money, meaning you can't typically take it out without being penalized on it unless you take it out under certain conditions, and that's typically at the point of retirement, and you still have to pay the taxes typically at the point in time that you take it out. So if it wasn't for the tax benefit of putting it in there, then you wouldn't put it into these types of plans. You just put it into a mutual fund or something, some investment account, and you'd save for retirement. But you have this incentive, tax benefits, and possibly employer benefits to put it under this umbrella of some type of retirement plan, which actually restricts your money, but you're incentivized to do that when you put the money in. So once you have the money in there, then there's a couple kind of things that you got to deal with. One is, well, you can't take the money out typically because it's there now. That's part of the restrictions. It's there. You can't take it out until they let you take it out, and it still might be taxable at the point of taking it out, and that's usually at the point of retirement. So at this point in time, if there's an emergency or something, then a lot of people might be saying, hey, look, I got money. It's in the retirement account. I just can't really take it out because I'm going to get penalized to take it out. And so the question is, can you take it? Should you take it out in that condition? So that's one kind of thing that comes up with retirement plans. If you're going to have a penalty and taxes on it, the next option people start to think about is, well, what could I take a loan and put the retirement plan against it as like collateral on the loan? Would be another thought process that people would be thinking about, whether, if they need money at that point in time. The other thing that's a problem with the retirement plan is that you're actually required oftentimes to take it out when you're at the point of retirement. So then at some point in time, the IRS says, now we're going to force you to take it out because we want you to pay taxes on it. So at the point of retirement, you might have mandatory distributions, which means you take it out when possibly you don't want to even, and then you're going to have to pay taxes on it because it's going to be taxable income at that point in time. So keeping those things in mind as we go through thinking about the retirement plans. Back to the text. Can I get money from my retirement account now? So can I get the money now? And that means you got money in the retirement account, IRA, 401k plan. Question, hey, look, I kind of need it right now. Can I take it right now? It's my money. Can I get it? Can I get it now? Back to the text. Under the CARES Act, individuals eligible for the coronavirus-related relief may be able to withdraw up to $100,000 from IRAs or workplace retirement plans before December 31st, 2020, if their plans allow. In addition to IRAs, the relief applies to 401k plans, 403b plans, profit-sharing plans, and others. These coronavirus-related withdrawals may be included in taxable income either over a 3-year period, 1/3 each year, or in the year taken at the individual's option. So notice that's really pretty nice, because normally if you have money in an IRA or a retirement plan, you can't take it out until you retire. Otherwise, you get penalized on it. Now, whether you take it out, no matter when you take it out, you typically have to pay taxes on it when you take it out. Why? Because when you put it in, that was the tax benefit. You put the money into these retirement accounts like an IRA or a 401k plan. It wasn't included in taxable income, meaning you didn't pay taxes on that income at the point in time of putting it in. The idea is that you will be paying tax on it, but only when you pull it out, and therefore you defer the tax till the future. So the fact that you're going to have to include it in taxable income when you pull it out is normal. You have to do that because that's the point of the IRA. But what you would like to have is not to be penalized on top of the tax that you have to pay. Not only that, however, they're giving you this added option here of being able to take it out now because it would be a crisis now. And instead of putting the whole amount in taxable this year, which could put you into a higher tax bracket, you may have the option, it looks like here, of spreading it out over a 3-year time period, which means that you, one, defer the tax that you would have to pay for the money that you would be taking it out, and two, you might be able to lower your overall tax bracket by not having all the tax be paid in one year, which could increase your adjusted gross income, increasing the tax bracket, your highest tax bracket that you might be in. So that could be a good option for people. Back to the text. Second item, these coronavirus-related withdrawals are not subject to the 10% additional tax on early distribution that would otherwise apply to most withdrawals before age 59 and a half. And that's huge, right? So, because that's really the thing that locks the money down. And that's the thing that the government's trying to use to make sure that people do save for the retirement. They're going to say, hey, put it into this account. We'll give you a benefit for it. And then we're going to lock it in there by penalizing you if you take it out of the account. But we're saying now, hey, we need the money right now because there's kind of like stuff going on. So could we take it out and not be penalized by the 10%? So if you could take the money out and not be subject to that 10%, that would be a good benefit. It'll still be included in taxable income, but it would have been no matter when you take the money out, because that's the point. And you might have that 3-year kind of just, being able to apply it out rather than all in the first year. So that's a good thing. These coronavirus-related withdrawals are not subject to mandatory tax withholding. So they're not subject to basically, when you take the money out, like when you have W-2 income, you have to withhold money. You have to apply for a W-4 and have withholdings on it, so that you're taking money right out of the paycheck and giving it to the IRS. These are not subject to any mandatory tax withholding, so that's nice. May be repaid to an IRA or workplace retirement plan within 3 years. So you can actually repay it to the retirement plan within that 3-year window time period, which is, again, pretty nice. Can I take out a loan? So now next option, usually if you're thinking about a retirement plan, people, when you need money, you're going, okay, I got money in a retirement plan. I can't take it out under normal conditions. So you're like, well, maybe I can't take it out because it's going to be a problem. I'll have to include it in income, and maybe I'll have to maybe I'll have a penalty under normal conditions. Here, you might not have the penalty, and you might but it still might be included in income. So usually the next question is, well, can I take a loan against it? I'll take a loan against that account. So question then, can I take out a loan? Individual eligible to take coronavirus-related withdrawals may also, until September 22nd, 2020, be eligible to borrow as much as $100,000 up from $50,000 from a workplace retirement plan if their plan allows. So you got to check the terms of the plan, but if the plan allows, you may have that option as well. Loans are not available for IRAs. So if you have an individual retirement account, meaning it's not through your work, then loans are not available for the IRAs. For eligible individuals, plan administrators can suspend for up to 1 year plan loan repayments due on or after March 27, 2020 and before January 1st, 2021. A suspended loan is subject to interest during the suspension period, and the term of the loan may be extended to account for the suspension period. Taxpayers should check with their plan administrator to see if their plan offers these expanded loan options and for more details about these options. Who is eligible? To be eligible for the COVID-19 relief, coronavirus-related withdrawals or loans can only be made to an individual if the individual is diagnosed with the virus SARS, S-A-R-S, COVID-2, COV-2, or with coronavirus disease 2019, collectively COVID-19, by a test approved by the Centers of Disease Control and Prevention, including a test authorized under the Federal Food, Drug, and Cosmetics Act. the individual spouse or dependent is diagnosed with COVID-19 by such a test, or the individual experiences adverse financial consequences as a result of the individual being quarantined, being furloughed or laid off, having work hours reduced, being unable to work due to lack of childcare, having a reduction in pay or self-employment income, or having a job offer rescinded or start date for a job delayed due to COVID-19, the individual spouse or a member of the individual's household, that is, someone who shares the individual's principal residence, being quarantined, being furloughed or laid off, having work hours reduced, being unable to work due to lack of childcare, having reduction in pay or self-employment income, or having a job offer rescinded or start date for a job delayed due to COVID-19, or closing or reducing hours of a business owned or operated by the individual spouse, or a member of the individual's household due to COVID-19. It was a fairly broad set of items there. So then, where can I find more information? Retirement plan recipients can learn about these provisions under IRS Notice 2020-50. There's a link to that here. The IRS also posted frequently asked questions, FAQs, there's a link to that here, that provide additional information regarding this relief, additional information on the CARES Act and retirement plans, as well as updates. Other FAQs and other information can be found at irs.gov/coronavirus. There's a link to that here. There'll be a link to this in the description.